GC Fit, where you can see, and then we'll get shortly started here, and then get the agenda going. So cool. Got a couple guys going through. Yo, Bruce, what's good, dude? Nice to see you. All right. Yeah, take a seat where you can, and then yeah, we should get going on this side. All right, cool. Let me bust out. Actually, where's my phone? Well, did I have my phone? Oh, that's not good. Where's my phone?
You want me to try calling it?
Oh, is it that one? Oh, yeah. Well, Well, I actually do need the phone. Wait a second. Yeah, you want someone to call it? You want to call it? Yeah. Actually, where did I put my phone? Yeah. Let me see.
Heck yeah, let's go. All out of through. Dog got it.
Huh?
Dog got it.
Yeah. Oh, there it is. Okay. Yeah. Yeah. No, I got something special for the introvert folks like myself. So that's why I actually need the phone here today. All right. So okay, cool. We will get things going here. All right. Cool. All right. So thanks everyone for coming out. Appreciate everyone here. If you didn't grab a name tag, please do grab a name tag up there so you don't have to introduce yourself 10 times unless you just want to say your name 10 times. That's totally cool. But yeah, we got the matcha station set up there. We bought some pastries there too. So I think as Johnny and Sam get it all going, they're the homies stepping it up today. You guys want to just, I don't know, as you guys see, it's not too busy. Just keep on going. Everyone can file in before we overwhelm them. So appreciate you guys for making all this here today. And then, yeah, I think everyone's got a name tag. We'll be good. But yeah, let's get things started just because got 45 minutes. Then we'll hit the pickleball court. It'll be very awkward to kick people off, but we did reserve it. So, all right, screw it. Paid for it. So I'm going to go get my money's worth. All right. So yeah, I just want to say thanks to everyone for coming out here today. I know it's a Sunday morning. Definitely means the world to me to see everyone out here. So it's really cool to see. And then, yeah, the kind of big thing is, before we just dive into taxes and, why we're kind of doing this event here, it's just, if you guys didn't know, I built my business during COVID. So I was like 2019, 2020. And essentially, like, I never stepped foot outside my house. So I was like just literally hiding online. And I was just like, all right, cool. This is a nice way. But then, as we've been like, COVID's not as apparent anymore. And I'm like, all right, starting seeing people like IRL just like means a lot more to actually see people. And you just build like a deeper connection when you see people in real life versus just like seeing guys on Zoom and Google Meets. So just want to start doing more events like this in the future. This is the first one ever, so no idea what I'm doing, but hey, just bear with us while we figure out the matcha, the generator, all this stuff and whatnot. So they'll get that brewing up. Oh, I can hear it. You guys hear that? Oh, that matcha is coming in smoothly. Okay, cool. And then you can hear all the pickleball noises. So I'm glad I bought a speaker today to get it going on that side. But the big thing here first is that as we dive in here, the big part is having like a community, relationships and culture built in locally. So we'll see, and then probably keep on moving these events. I know a lot of you guys are from like Peninsula, so we'll move down there on the next one so we don't have to drive so far. So we'll rotate them. One day I'll make it down to San Jose, if anyone's all the way down there. Oh, there we go. Yeah. So I think we'll just rotate around the bay so it's not as miserable for everyone. So thank you for coming on today. But yeah, so the whole like part about networking that I want to talk about, just a quick blurb on that, is just networking is always awkward, I'd always say. And, well, at least for me, I don't know, I'm actually more introverted, but my wife always thinks I'm extrovert with introverted like tendencies. But I always find it awkward because you just go to a bar, you go to a happy hour, you go to a big event, and you just gotta be like, hey, my name's Tony, I want to sell the tax services, dude. It's just like awkward as shit, versus just like having it more naturally built of like, hey, here's John, he knows how to fix your pains, now we're good to go. Now you always know, and it just comes naturally, not just so awkward, not so forced. So kind of like the whole part of like my version of networking here is just like, hey, get to know people, learn what their superpower is, follow them on Instagram, and then just like cultivate relationships naturally. But the big thing about networking is your net worth. So if you haven't realized, or you hear the phrase all the time, is your net worth is equal to your net work. And I actually got like one crazy story about this. It's actually related to my dad. So this dude dropped out of third grade, he's from China, and there's missionaries in like China, Vietnam area at that time. So the dude like pretended to believe in Jesus and was like, oh, free ride to America. And then he was like, all right, cool. So he came over to America and he had $100 to his name at that time. And then he was just like, all right, cool. I'm in America, what I do? And then he ran away from the missionary family. But then when he ran away, he barely knew any English at all. And the big thing is, like, as he progressed his whole life, he just learned how to cook. So he had a restaurant for 34 years, and he just knew how to cook. But the one crazy thing as I studied his journey was that he was super connected. I was like, damn, this dude knows someone for something all the time. And it's just because he always asked his customers, what do they do? Who do they know? And, you know, through that, he was able to, like, survive, kind of thrive in America for like the last 40 years. So he built like a portfolio of 20 homes, sold his restaurant. So he's like chilling now, but now he's like itching out of retirement to like come out. So just bad OG tendencies. But the crazy thing was just like, even if he didn't know English, he's always like, oh dude, if I knew English, I would shit on you all day. And I'm like, probably dude, like, yeah, I mean, but hey, I made it here. So we did something right, but it's cool, you know, but it's really why he really pushed me. But it just shows you, like, you don't know English, you can still survive in America for 40 years and build up a decent sized living. And then, yeah, the big thing here I mentioned earlier, just like for my introvert friends, is that if you don't want to talk today, that's totally cool. But you still, I'm sure you have questions. So, you know, even I was in Canada about a month ago, and I was at like a summit, and you could like raise your hand, they'd throw you the speaker. And I was just like, man, I want to say something, but like I was super anxious about saying it. And I was like, damn, this is kind of awkward. So I didn't say much, but when I did, I wanted my question in. So like I don't know, the alternative way of doing that, I was just thinking like, if you got questions and you don't want to talk, just text me at 254 CPA Dude, and then I'll just take your questions here. So now you don't have to raise your hand if you are shy. So just want to make this event inclusive for the extroverts out there, the introverts out there too. So just 254 CPA Dude. I think it's 272-3833. I never really remember. So that's on that side. And then lastly is just to get, you know, everyone's money's worth out here today is just to, you know, make sure, you know, you paid your toll, your gas, you know, your time, and just want to bring as much value as I can for you guys. So what we'll do for like the masterclass, the workshop here, is actually take questions. And then from there, I'm just going to weave in some themes that I see. And then from there, we'll just hop into the class that way, just so it's like more relatable to your specific situation. And then if there's no questions, then I'll just make some shit up with some stick figures on this side. So if you guys, we'll just take like the next like 5 minutes. If you want to either raise your hand and let me know what questions you do have, I'll write them down. Or if you just want to text me those questions at 254 CPA Dude, and then we can spend 5 minutes doing that here. So I guess for the extroverted folks out there, anyone have any questions? Yeah.
Applied for the pin.
Mm-hmm. Oh yeah, pin.
With my kid. How long do I wait for that to?
Oh, nice. Pins. Nice. I'll write that one down. All right. So Patrick's question here. Let me put it down here. But one. Let's see. IP pins. How does that work? All right. So we got IP pins on this side. Cool. Cool. Sarah.
Hey, so for the introverted business owners out here,
Yeah.
I'm really impressed by your social media. So any tips you could share
Okay.
would be awesome.
Yeah, I'm no good, but I'll share you what I try. Yeah, 2. All right, we got the social media on that side. Great question there. Okay, Raymond? S Corps? Nice. All right, perfect. All right, cool. I'll just check the text messages just to see if anything's flowing in on that side on there. Good, good. All right, cool, cool. Any other questions from anyone on this side? If not, these are 3 great topics. Yeah, John?
Real estate structure.
Real estate structure. Oh, structuring. Yeah. Oh, nice. Okay. It's actually almost weird to write because you just type everything. I was reading something about, was it ChatGPT, where people can't like hold their minds or you can't think anymore because you just rely on ChatGPT or something like that. Your memory's like worse because of AI. I think I'm like brain rotting myself, but it's cool. Someone asked me like, oh, what's the deduction for this? I'm like, I don't know, man, give or take like 13 grand plus or minus 2. It doesn't adjust for inflation, so you don't need to really know the numbers anymore. You know the principles. Yeah, so nice, that's a good one, structuring. All right, nice. Anything else from anyone? All right, no questions on there. All right, cool. The introvert state, introverting, that's cool on that side. That's my natural state. Yeah, actually, if you asked like anyone from high school, no one believes me because everyone met me like after like college. But like in high school, I was the most quiet kid ever. Didn't talk to anyone. at like parent-teacher conferences, my teachers would always tell my mom, like, if your son could talk more, he'd be even better. But I'm like, fuck, dude, got A's, who cares? Yeah, just do your work. Yeah, but that's just me. I think American cultures are very different than Asian cultures on that side. So I'm like, okay, yeah.
Kids.
Paying your kids? Oh, nice. That's a good one. Paying kids. All right, here we go. Kids. All right, cool. Actually, yeah, who has kids in the crowd? Here. Oh, so we got the dads, the parents table. There we go. There you go. My kid's right there. She's roaming around. Yeah, Daisy's just coming up to everyone. All right, cool. I think we got some real good topics here. We can actually go pretty deep on this side. And then, yeah, if you guys have questions as you go, we can definitely take that in. And then, yeah, smart. There we go. We got the matcha brewing up there. So, yeah, just funnel in, grab the lead by example. There you go. They got no shame, so I love it. Yeah, they got to get that caffeine in, actually. So I appreciate that. Yeah. So line up in the that over there, and then I'll just draw this up as we go, and then we'll go from there. All right, cool. So let's go. All right, so this is compliance. Let's see, I'm just find the themes on this side. This is compliance. Social media, this is more business related. Okay. S corps, real estate structuring. This is both of these are structures. I should probably write better, but it's okay. I'll speak over it. And then paying kids. This is strategy here. Okay. Cool. So, all right, let's go into, which one do we want to go first on? We can go structuring first. I think that'll probably be, yeah, pretty good for everyone here. So we'll go structures for S corps and real estate. So structuring, talk about LLCs, C corps, S corps, those fun parts, and then we'll dive into it. So let me turn this over. Hopefully it works. Okay, great. So let me right here, structuring. All right, so structuring is actually like really, really important for what you're doing on this side. So we're gonna start with let's just go with the business structure, just because that'll be easy to knock out, because you can actually use the business structures for real estate at the same time too, depending on what you're doing on that side. So structuring, the biggest way on how you want to structure. So, we're talking about S corps here. S corp. Oh wow. Okay, this is why I need spell check. Okay, so S corps on this side. The reason why you want an S corporation is if you have ordinary income. So if you have ordinary income, you want to consider an S corporation. So ordinary income, what does that mean? This is the income that you trade time for. So you trade time for money. It's not where you're sitting on your butt and collecting checks doing nothing. This is the one where you're actually trading time for money. And the reason why you do that is when you're trading time for money, you're subject to self-employment taxes. So they call this, some people joke and say this is like the silent killer tax, because indirectly it does silently kill you if you're not playing out correctly with S corporations. So the big reason on S corporations, when you want to have it, it's always like the magic question. I always say, hey, I go around 50 to 70K of net income is when you want to think about having an S corporation. And the main reason why you want to consider that is because there's a lot more compliance, a lot more bookkeeping, a lot more payroll. There's all these administrative costs that you have to do to keep the S corporation going. But what's the point of having this? The whole point is actually saving a lot in taxes. So if I have two people, let me draw my stick figures here. There we go. I'm an artist at hand here. So we got sole proprietor, we got LLC, and then, we got even multi-member LLC. So you can be a single person LLC, multi-member LLC, and then now we got the S Corp, Sam over here. Someone calls S Corp Sam. These two, if I just use $100,000 as an example here, it's like night and day difference actually. So this is I got no magic tricks, but this is actually one of my few magic tricks that I got. So on this $100,000, on self-employment taxes alone, this guy over here, I don't know, we'll just call this, I don't know, Bob. There's no Bobs in the crowd, right? I use that name a lot. Yeah, so all right, no, there's no Bobs. Okay, cool. If not, I'll switch names just to be kind. So Bob here is going to pay 15.3K in self-employment taxes. And so that's a ton. So 15.3% already as a sole proprietor LLC, multi-member LLC. Now, S Corp Sam over here is smart, right? He's like, dude, I know taxes. Let me show you what's up. So he instead, S Corp Sam, is going to take that same 100, but he's going to split them up into 2 buckets. The 2 buckets is 50K of wages, so W-2. He's going to pay himself W-2, and then he's going to pay himself 50K as a distribution. Now, because it's the same 100K both ways, but self-employment taxes only apply to the W-2 portion. So by doing this, he's saved himself $7,650. So that is just big on that side. So you literally can have the same amount of income, but the way you structure it is really, really important. So that's kind of like the big thing of why you want an S corporation. Now there's a point of diminishing returns though for an S corporation. So after about $700,000 net income, you still want to start thinking about a C corporation. So after a C corporation, those are built. So I always say the S in S corps is for small businesses, and the C corps are always for your big, like Fortune 500 companies, just because the tax code is written well for big businesses. So that's 21%. They only pay 21% federal taxes. So once you're embarking that $700,000 net income, do hit up your CPA, hit up just be like, oh shit, I heard sometime about, hey, $700,000, I should probably raise my hand. So that's when you want to start considering that, where you can save a lot more money. So S Corps, really great. Consider it when you're $50,000 to $70,000 net income. Just be like ready for a lot more compliance. Bookkeeping, everyone's worst nightmare. Balance sheets, no one likes. Payroll, more extra added fees. But a lot of tools and systems these days to get through them that way. So S Corps is a great way of structuring. The other structure that I talked about too here is I'm going to talk about real estate structures. So I'm going to stay on this one just for real estate also. So anyone, who's all got real estate here? Here. Nice. Okay, cool. So a lot on the real estate side. So you can actually have a lot on the real estate. You can structure an S Corp up for real estate also. So how you can do this is once you have a decent sized portfolio, or you're like nifty and you're like smooth with the taxes, you can actually set up an S Corp to be a management company. So now this management company, you can actually, so instead of paying your PM your 10% every month, pay your own S Corp 10%, and then that way you can start funneling all these other write-offs into it. More so like if you really want to pay kids, start up like a solo 401k, those are other strategies you can use for an S Corp. So S Corps do go to real estate, but it is like, if you don't have like $8,000 to spend on maintenance per year, may not be the best state yet. So those like bigger companies, when I used to work at KPMG, like these ultra high net worth people, they would always have a, so how it worked would be, they have their individual here, and then they actually have a C Corp here. And then you could also, this C could be an S Corp also. And then finally, down here are all the houses. Oh boy, this is an ugly house. I'm not an architect. Oh my God, okay, close enough. Anywho, you flow all the income up to the C Corp. So more so the bigger companies, they do C Corps because they call this a blocker entity. This blocker entity blocks the income from going up to the individual. So it all stopped at 21%. But S Corps, you can also throw it through an S Corp because then you can filter it back down to lower income tax brackets. So, sometimes on homes, if you got your like retired mom and dad, like my dad's got nothing to do with his life right now, I'm gonna probably just pay him some money just to help out at the house because I need my room repainted right now. So I'm gonna move some money towards him on that side. So S Corps, these can also be applicable for real estate also. So now we'll go into that second topic about real estate structuring. So yeah, the main topic is just like structuring and how you can get more efficient with it. All right, so the next part here is to talk about real estate structures. And let me write this out here. I would say there's always 2 components to this. So real estate structures. It is, the big part on real estate structuring is there's the tax side, and then after the tax side, there's the legal side. So on the tax side, I'm going to talk about that since I'm not an attorney. So you can consult your attorney on that side or ChatGPT. But real estate structures, there's generally, we'll go for holding real estate examples. And these are the most common scenarios that I see for holding real estate. And that general setup here, if I can set this up the right way, is we got the trust up here, and then the trust has the LLCs down here, and then the LLCs, you could have a holding LLC. I'm just write that down as a placeholder before I forget. Down here, then you can go down here and you can have other LLCs that finally own your homes. So now that I have this written out, I will explain how it actually works. All right, cool. So this is going to cost you a lot in legal fees, just as a heads up. But it's more so, I mean, if you got a couple $1 million of properties, or you have even decent net worth in those, or like equity, I would say, in those properties, you want to consider this. So I would say first, like, do you need all this? No. You can literally just not have any of this and own it in your own name. Because let's just say you have $1 million house, you did an FHA down to $35,000, and then you still have $200,000 in student debts. Like, bro, you're broke as a joke. Like, dude, if you get sued and lose everything, who really cares? Now, it's much different though if you have $1 million house, you have $800,000 put down into it, and then from there you have only $200,000 left of equity. Your mom and dad also have left you a couple $1 million in the bank. You have a lot more to lose, so you want to consider this. So it's never a one-size-fits-all answer. It's always the bad answer that CPAs and attorneys always use is it depends, because it honestly does depend on like your situation. But let's just say for today's example, you have a decent amount, you got a couple $100,000 in your 401k, you're making a couple $100,000 per year, and you have some properties with 10 to 20% equity in them all. So it's like you're not broke, you're not rich, but we're getting there soon. So we're going to use that as an example here today. And then, so the most common example that I see here is like you have your homes down here, right? Those homes should be owned by your LLC. And then your LLC then can be owned by a holding company up on top. So this is like a maybe. This is if you want to get more sophisticated. You could just skip this layer completely and just have it go to the trust. So you have your home that's owned by your LLC. The member of the LLC is your trust though. This is where most people get wrong. Once again, I'm not an attorney, but have a really close attorney friend and also see this all the time. So this is your traditional structure. Now, if you don't have a trust, you definitely want to get this in place, because I have very bad news. Unfortunately, you will die and have to pay taxes. So nothing's guaranteed but death and taxes in life. So you definitely want to have this structure in place. Since we're all in California here, minimum probate is $20,000. So a trust is probably going to run you depending on how crazy you want to get with it. We have like paralegal people that we work with. It's like it starts at $1,500, and then we have like more big time attorneys. They're like start at like $7-9 grand on that side. Patrick, isn't there someone in like the Chinese community that does it really cheap here?
Yeah. I think there's Faye something.
Faye something? Chinatown?
You go to a church, she'll do it for like $500.
$500? Oh yeah, okay. So hit up Patrick after this. He's got the plug on this. So yeah, on that side. Just review her work, make sure it's good. So I mean, after anything these days, whenever you get anything done, you don't know what the hell you're looking at, just put in the ChatGPT and go. So like if you're not using AI today, like you really need to embrace the AI stuff. So this is like your most traditional structure for holding real estate and how you want to consider it. Now the downside of having so many LLCs, so another question that I get all the time is, how many LLCs do I need? And it's always a it depends question. But generally I always ask our clients, I'm like, hey, how much are you willing to lose? So I had one guy, he had, I think he has like 70 properties. And I was just like, I was gonna use Bob, how much are you willing to lose? And he's just like, I'm cool with losing $250,000. I'm like, all right, cool. Because he makes $250,000 every 3 quarters or 3 months. So I'm like, all right, that's cool, dude. So then what we did was like, we just put enough equity into each LLC of $250,000. So then it would end up being like 2 to 3 properties, because these are all in Georgia. So they weren't like super like high like value properties. So probably like in California, you always hear, oh, should I get 1 LLC per property? If you can afford it, it's going to cost you $800 every single year for an LLC. So that's where you want to be very wary on like having so many LLCs, just because it's going to cost you a lot of compliance fees. So this is for holding holding your properties on this side. And then like, I have no idea why I left this other side of the paper open now. But this is how you want to hold properties if you're buying rental real estate. Now, from an operational side, one thing that I can show you here too for real estate structures is actually how you set it up from operations. This is definitely not tax related at all, more on legal side, not an attorney, don't trust anything I say, but I do see this through like hundreds of clients that I do work with. So this is for your daily operations. So I'm just call this ops. And how you actually have this set up is you actually have, I'm going to just put this as an opco over here, and then you have this as a holdco. Also, one other thing is like how taxes and the finance and legal world is written. I'm pretty sure they just make all these fancy ass terms for no reason, just to confuse like the ordinary folks. Because when I first got into this, I'm like, God damn, dude, what the fuck's an opco? What's a holdco? And I'm like, dude, is this the company? But I don't know why they name it all this fancy shit, but it's cool. I'm here to digest it for you. So you have this operating company. This is actually more day-to-day operations, not related to taxes at all, but just to show you guys how you want to structure it, because it does relate to taxes because you have to file the entities, is all your leases are through your operating company. Your operating company literally has nothing in it. It collects rent and it shoots it out every month, right? Essentially, all this is a shell entity. So when someone like slips and falls and cracks their head on your property, they're going to sue your operating company. They don't even know who your holding company is, right? So that's why you're hiding behind the holding company. The holding company actually owns the assets, the actual houses here. So you do want to separate this from your holding company to your operating company, just so you have that clear division. So when shit hits the fan, you're totally fine before you just lose it all. So there's a lot more to this in terms of protecting it, not commingling it, having clean books and records, but just something if you are operating real estate today, think about having an operating company and then a holding company, and the holding company is this guy over here, right? And then you zoom in, the holding has LLCs hold the properties, which is the same thing here. So operating company, and then this thing, it's always, not always, but I would, there's no definitives in tax world. It's really hard, but it's always generally speaking. But this one is pretty close, is that you can always make this an LLC. The reason why you make this one an LLC here is because an LLC can be taxed as an S Corp, be taxed as a C Corp. So LLCs are like shapeshifters. They can like turn into any other entity that you do want. So this is a way of how you can structure your real estate here. So these are like two examples of structuring. If you got more questions on structuring too, I'll be around too. So you can ask more on it, get some game on here. But it's always a tax and legal answer. Tax side, I'm always going to say which was going to save the most amount of money. But the opposite side is legal. It's going to be like, I want as much protection as possible because they want to protect you as much as possible, but that's also going to cost you a lot of money. So like our two opinions are actually very, very different, because I want to save money, they want to protect you, which costs you a lot of money. So just things to think about. So we have structuring, and then the other part here we had was, let's see, so we got compliance, strategy, social media, cool. All right, sounds good. I'll go into the, let's go into the paying kids part next, because you can use the paying kids portion to, through your real estate, so you can pay your kids through real estate, or you can pay your kids through the S corporation at the same time. So the broader part, I like to think about things like, I've been really hearing this phrase lately on social media, which is like very interesting. I might steal it actually, but I hear this whole thing like clouds, and then you hear like this thing called like, just like dirt. And I'm like, oh, this is very interesting. It sounds kind of like catchy at the same time too, but essentially the clouds is the principles, right? So this applies to anything that you do. So whether it's taxes, whether it's, consulting, coaching, whatever you're doing, the principles always stay true, right? Like no matter what, you're gonna wake up, the clouds are gonna be different, but are like there more or less. But the dirt, these are the tactics that I've been learning along the way. It's how they're explaining it. So tactics is like, the tactics change every day, right? Like we could probably, like all this could be gone tomorrow and it could be all cement and we could have more pickleball courts. So this could change, but we do know the clouds are always gonna be more or less the same up top. So the principle here, it's like paying kids is more in the middle, right? So if we're paying our kids, we can pay many people here. So paying kids, like I said, I'm gonna pay my parents, right? That's another area. The other area here is that you have broke friends. You can do that also. And then at the same time also, if you have siblings that you support. So there's many areas here. So the principle here that I wanna show is, this is just called income shifting at the end of the day. So the key part is that, let me finish writing this out, is that you have is that your income shifting from a higher bracket, so if you're at the 37%, you're a big baller, down to someone that's either at 0, 10, 12, 22 even. You want to move this money down to other brackets. So that's why when you have kids, you want to have the URC, you're at 37%, 35, they're going to be down to 0 if you pay them up to $15,750 this year. So kids, you always got to do. So like my mom, when I worked at her restaurant when I was a young kid, like she paid me, I think she paid me like $400 a month or something. I didn't see it, but like she put in my account, and then, you know, she got the write-offs that way, and I just collected tips. Also, fun fact, in Minnesota, that's originally where I'm from, tipping culture in Fairmont, Minnesota, middle of nowhere, 10,000 people, it was $1 per person. So if it was a 5-person table and it was a $100 bill, guess how much you got? $5 if you're lucky. So, you know, always be humble for your dollars. It was a grind. It's cool though. We're here now. So we kind of made it, but still haven't made it. It's fine. You know, just live life the best you can every day. It's my thing. So you can write off that portion. You can pay your kids up to $15,750, all tax-free. Now you can actually pay the kids more. So if they're actually doing real work, so ordinary and necessary work, then you can pay them even more. So if you want to pay them $25,000, you actually can. They would just pay a little bit at the 10% bracket, which is still better because you got a much higher bracket. So as long as the work is justified, you'll be able to pay the kids. So in order to actually like tactically do that is have a job description, like what are they going to be doing? What's their fair market value rent or rate that you can pay them to do the same work? And then luckily we're in the Bay Area. I think it costs at least $25 an hour to get anyone to wake up these days to do anything. Actually, what is minimum wage now? Is it 20 something, right? 17? Oh, 17? Okay, so it costs at least $17 an hour for someone to come out to do anything and to show up the target. So you can pay your kid at least that amount, if not more, right? As long as the market rate, they always say, as long as it's like arm's length and it's like, what do you call it? Like fair, so that you would pay someone else to do. So if you wouldn't pay a baby model $2,000 for one sitting, but you're willing to pay $400, that's the same thing that you could do too. So paying your kids is actually really a key way to start hypercharging it. And then if you really want to get really fancy with it, you can start up a Roth IRA. Just more paperwork. You have to issue them a W-2 because you have to have earned income. Or else, you know, they can use this for their school activities, you know, toys, whatever they want on that side. So paying kids is big. But the same principle, like I said here, is just income shifting. So, you know, my dad, he's retired. He's got just this rental property income coming in. He's at a lower bracket than I am. So I can move money towards him on that side. Like I know my sister Paulina, she had like all her tote bags done. My mom helped out. Hopefully she paid her. If not, she should now, just to write it off on that side. And then if you got broke friends, that's cool too. If you support them instead of giving them money, you know, actually just make them a tax write-off for you on that side. And then lastly, if you got siblings that you do support on this side, then you can also give them money. So if you're like handing out any money to anyone, think about, can I make this person a tax write-off here? So that's kind of like the principal strategy of the income shifting part on that side. So we got structures done. Okay, now we're just talking about IP pins and compliance. So yeah, so one part here, one surprise, well, not surprise, is that your identity could get stolen possibly, but you can protect yourself. So what you can do is like, there's a couple of scenarios. The most common one that I see actually is that when there's like two people that had a kid and they may not be together anymore, but one person claims the kid before the other person does. And then what happens when you file taxes, the person who filed second, their tax return will get rejected because the first parent claimed them. So that's the issue of like, hey, your identity could get stolen, or you just have partners that don't agree of who should claim the kids. So that's where you can protect yourself and get yourself an IP pin. So I think it stands for Identity Protection Pin. And it's very annoying though, because you have to get it like every single year. They'll send you a brand new one. But it is a good way that if you go file a return and like you don't have that pin, your return is going to get rejected, but it's like a good rejection, so no one's stealing. It's like someone stole your ATM card. If they don't have the pin, they can't actually get money. But now it's always annoying because you have to put it in. It's kind of like 2FA. Like 2FA is great, but I'm like, God damn, this is the most annoying thing ever. So it's good to have, but yeah. And then in terms of getting it, it depends on the IRS how fast and slow they are. You know, you could see it, you know, probably in a couple of weeks, hopefully not a couple months. But the I think, well, as of Thursday when I last saw the news, the government was still shut down. Is the government still shut down? Does anyone know? It's still shut down? Okay. I've been living under a rock the last couple of days since Thursday. So yeah, with that, there's less IRS resources. I did see that the American Institute of like CPAs, they did urge all the IRS agents to be like, hey, keep working for taxpayers even though you're not getting paid. And it's like, come on, bro. Like, you're gonna really expect them to work and not get paid? I don't really think so. Like during COVID, that's why all the IRS agents like were chill. They gave them two options. It's like, hey, you can get furloughed, or you can keep on, you can just stay and keep on working. And then like everyone's like, peace, I'm just staying at home. I'm not working. So then taxpayer services suffered a ton because then you couldn't like get an IRS agent to do anything at all forever. So IP pins, it's good to have, but it's just like more annoying. But I think it's like one of those more sensitive topics where you probably should deal with the annoyance, just like 2FAs for your bank accounts. Yeah. All right, and then we got that portion here, and then, so we got that. All right, last part, social media for the introverts out there. So this is how I do it, not pro by any means. Is anyone good at socials out here, by the way? Want to raise their hand, share some tips too? We'll go around the table. Yay, nay, yay, nay, there we go. Okay, there we go, nice. Calvin, all right, there we go. Perfect, that should be good. All right, so, yeah, there we go. We got pros here. All right, so social media, so I do spend a lot of time trying. Borderline, what's that phrase called? Insanity, where you keep on doing the same thing, but expecting the same result. But this is what I can share that I do try to do, and you can take it for what it's worth. But I've like done like a lot more investing into like social media and learning like what to do, and by no means I'm any good. But the first thing that I did learn that builds more, and as you guys will probably see, is like, here's the secret sauce. There's no secret sauce actually, but one is, so through a mentorship I'm doing, you just do 3 stories per day. So if you can start here, I think that would be like a really good start. Just get on your phone, whatever the hell you're thinking, someone pissed you off. Like sometimes I go on after like a call, I'm like, man, that was dumb, but I try like keep it more PC. But if you really unfilter, be my guest by all means. 3 stories a per day that you want to do, and it is more so just to talk about like, hey, what part was fun or what's something that you want to share with your audience on that side. 2 is actually batching. So on a batching side, this is one area that you want to batch your content on. Just makes your life easier. So like during tax, like I used to do like 1 per day, and then during tax season I would get like completely, oops, I think that thing died. Oh, I think we ran out of gas. Oh shit. All right. Well, the generator ran out of gas. I guess I got to yell now. Well, there's more gas there. If you want to pour more gas into the generator. You still got enough hot water, bro? Or we should probably pour that back in. All right, we'll figure that out here. Well, I got 5 minutes. I got 3 minutes left, and then from there, we'll move on from there. So I'll try to yell a bit louder here. But batching is big. So like yesterday, I actually like batched out like, dear God, I think 40 videos. I just like spent like an hour just going at it. So like batching is really key on that side. And then batching, and then no, I don't actually edit my own stuff. So you have to, I think finding your a good editor is good on that side. It just makes life a lot easier. I just don't have enough time. It's really like, if you have time, do it. If you don't have time, hire someone else to do it. Just make sure that whatever you're doing pays for that person and then some. So you really have to bet on yourself on that side. So editing is big on that portion. And then as I'm learning more and more is always like, I'm no good at it, but I'm just, what I'm learning, I'm trying is trying to storytell within it of your actual like reel. So posting like at least 1 per day, if not go up to 3. So I just like hired a new agency to just like boost ours up to go 3 per day on this side. So just getting more frequency, because one thing is people don't even see what you put out there, and then you're like, oh, okay, cool. So like you post it, you think everyone sees it, but it's like, dude, I barely see anything. They're like, oh, hey, did you see blah blah's post? I'm like, nah, man, I got no time to look at this. And then, but you don't even see it. So the more frequent that you can post, the better on that side. But we do got a couple people. I forgot. My sister's actually pretty decent at it. Any tips you got?
I think if you can get people excited about you as a person, because people like following people, not friends. So the more you can share about your life, the more people know you. And they're like, oh, that's my friend. And then you're on the real estate, and you're like, oh, maybe I should hire them with my real estate agent because they feel like a friend. So,
Yeah. Okay, so sharing more about yourself, yeah, is good. I don't share that much, I guess. I'm just very, there's actually one thing that they said was, if you're too clinical in your advice, it doesn't hit as much as if you were to share more of yourself. So yeah, it's one area to kind of work on that side. Any tips here?
Sell in your stories and build value in your posts.
Oh, so selling the stories
Most people
and build value in post.
stories, yeah.
Oh,
And then you
nice.
binge your content on
Ah, there you go.
actual posts. Yeah.
Nice, nice. Okay, so yeah, other parts on the social media side. I think the biggest and the biggest part that I would say for most people is like, you just have to do it. Most people are just like too scared to do it, which is fine. You don't have to like talk. There's like friends of ours that they just literally have text posts and they're killing it. So, but the biggest thing is like doing something versus nothing. It's kind of like taxes in general. Like doing some tax planning is better than doing no tax planning at all. So that's kind of like the same principle. It's kind of like many things in life, right? It's just like, you're better off trying than not trying ever. So that's kind of a big thing. Calvin, you got anything to share?
Just be authentic. Just be yourself.
Authentic? Yeah. Nice. Yeah, that's a really good one. I like turn into a robot or some other fucking freak online when I when I like turn on this camera. I'm just like, gee, blah blah. I'm like, oh fuck, that's not me. I'm like, who the hell's that dude? I don't know. Like versus like just chatting here right now. I'm like, all right, I can do this just fine. But once that camera goes on, I'm just like, dude, I just turned into some other weirdo. I don't know why. It's something where, nice. We can be friends. Yeah, there we go. Yeah, this shit's hard. Like, it's just the camera that you're like talking to, but I don't know why when you have the script or the hook, it's just like you just turn into something else. Yeah, so I feel you. I'm still trying to work on it. So by no means am I perfect by any part there. So, all right, cool. So that's kind of like mostly it on this side. So I guess like, yeah, just to wrap up here is, yeah, big thing is like, you know, taxes. I just want to leave everyone with like, do some tax planning versus no tax planning. And then the big thing is this relationships is just like, hey, you know, I probably just say, you know, if you turn to someone here today, grab their Instagram, grab their handle, go follow them. And then also like maybe one piece that you're going to take away that you're going to actually like implement and do. And then, yeah, I think the matcha will keep on brewing once you figure out the generator again. And then, yeah, at 10 here, it'll be very awkward, but I'll just be like, we rented the court. Can you please come off? Yeah. There you go, there you go, nice. Good thing you're big, yeah. Yeah, nice. Need some reinforcements on that side. So, yeah, but no, thanks everyone for stopping out this morning on this side. We'll just go chop it up on the pickleball court next and then just have fun for the next couple hours. And then I think if we can still play, keep on playing. If not, we can grab, there's this one local bar with one of our friends. It's Match Point. Match Point? Yeah, we got over there and I think he's hooking us up with some food and like drinks for like a discount or something like that. So if you guys want to swing through after that, that'd be great. But yeah, thanks everyone for coming out. Yeah. All right, cool. As for pickleball, I probably would say if we want to pair up with like more like beginner folks to play with beginners, intermediates to play with intermediates, and then the advanced folks, I don't know why you came. Yeah, I fucking suck, so yeah. Yeah, yeah, exactly. So yeah, I think we'll make our way over there, and then it's, so we rented the first, the 4 courts on that side, and then the 2 on this side we did not, it's because I think it was like a tennis court or something, so it'll be those 4 over there, yeah. And then if you don't want to play, that's fine too, you can just hang out, and we can just shoot the shit too. Yeah, we'll probably just be here for shooting the shit and then moving the pickleball stuff over there. We'll go grab the courts first. Cool. All right.
Solid, man.
There we go. We're trying. Yeah. Yeah. Yes. Oh yeah. Oh yeah, definitely. Oh, nice to meet you. All right.
I will reach out to you.
Oh yeah, sounds good. All right, sounds good. Safe travels here back now. Yeah.